Hello guys, today I want us to do some comparison between using PropFirm versus your live account. When I started trading about 6-7 years ago, back then prop farms were not a thing at all. We did have some farms which existed, but clearly I think they were not as popular. So the only way we knew to trade was using a live account. Clearly, if you're using a live account, it means you're going to deposit your own money. And unfortunately, not everyone has a lot of starting capital. So sometimes we deposit $50, $100. If you get a lot of money, maybe you deposit $500 to $1,000. And back then, having $1,000 live account was actually serious capital. In our current era, we do have access to prop farms. You can visit prop farm match and see the different companies that they do have available. You can filter to check, what prop farm do you want to go for, the due diligence. They do have discounts as well, which you can check. But on today's video, I just want us to do a general comparison and see if I was to trade a prop farm versus a live account in 2025, which one is better, or maybe should I have both of them? Myself, I've been focused a lot on the prop farms for a long period of time now, for a very simple reason, which I think I'll be explaining in this video. I think with prop farms you get better leverage and access to capital, which allows you to withdraw large profits that you would need a lot of years to, make the same amount of profits on your live account, especially if you don't have large capital to deposit on your personal account. So that's why I've been leaning more on the prop farm side. But without a doubt, there is also a lot of benefits of trading with a live account, which we can't ignore. And as a trader, sometimes you may just ask yourself some questions like, what if prop farms don't exist tomorrow? Or what if the favorite farms you've been using have an issue and you can't trade with them? I don't think this will be happening anytime soon, but that safety net to just ensure you can also trade on your live account is something very important as a professional trader. And also, if you want to build a track record, you can't build a track record with a prop farm, because on a prop farm, sometimes when you get a withdrawal, they clear all your trades on different companies. You can't go maybe to an investor or a firm that you want to work with as a trader and show them your payout certificates and say, this is my track record. You would rather have even $1,000 live account that you can show them I've been trading this account for 5 or 3 years or whatever period it is, than going to show them a 10K payout from a prop firm, because that's not the best way to show any consistent track record, as compared to having a live account which can show your P&L curve for the last 2, 3, 4 years and a very detailed statement in terms of your drawdowns, your average win rate, your average lot size, position size, all those things. So there are different ways to look at it, but I think each one of them has advantages and disadvantages. And use a very simple comparison of a $1,000 live account versus trading a prop farm account worth the same amount. So just using prop farm match, I've found a random farm here, Funded Next, which I want us to just see what $1,000 would do. So if I was to take a Funded Next account on prop farm match, under the challenges here, I can see all the challenges they offer, and let's see what $1,000 can do for us. So $1,000 on Funded Next can buy us a 200K one-step challenge. I think it can also buy a 200K two-step if I'm not wrong. Yes, same $1,000, in fact the exact amount of money, can buy you a two-step challenge of $200,000 on this prop farm. Now at the same time, I want to open here a calculator, which you'll see how it will come in handy. And it's a compound interest calculator, because I want to show you the difference between trading a personal account versus a live account and my thoughts on it. And you guys can also share your opinions as well. So if I'm to take a 200K two-step challenge on Funded Next, just by clicking on it, I think we can see all the conditions. So the daily loss is 5%, the maximum loss is static, and the profit target is 8% phase 1, 5% phase 2. So I want us to use a 1-year period of trading the live account of $200,000 all the way from the challenge to passing. Of course, we'll have some assumptions, but I just want us to do the math and see the difference. If I start a 200K account right now, and we want to use a 12-month period, so I don't want us to assume the account is already funded. Let's just assume we'll start by taking the challenge of the account. Let's assume your strategy averages about 3 to 4% a month. So let's just say it makes about 3.5% on a monthly basis, because you're a consistently profitable trader. And we could use the big figures like 5, 6, 10%, but I just want us to be as practical as possible. So if you do 3.5% a month, typically it might take you about 4 months for you to get funded on this account, for you to achieve both the 8% and 5% for phase 2 all combined, assuming you risk 1% a trade. So out of a year which has 12 months, we've assumed you took 4 months to get funded. I know depending with the strategy, you might get funded within even a month or 2, no problem. I just want us to be as practical as possible. So 4 months for me to pass both my phase 1 and 2. So I'm remaining with 8 months of the year. Let's assume for the rest 8 months of the year, I'll only be profitable for 6 out of the 8, because typically you won't be making money on a monthly basis on some strategies. You might have a drawdown month and you have to recover or a break-even month. So let's assume you only made money for 6 months, and now that I'm funded $200K, which cost me $1,000 to purchase, on my $200K I want to be risking about, we could say 1%, but for the purpose of being conservative, let's say I risk 0.8% a trade. So 0.8% on a $200K is basically $1,600 per trade. And if my system averages a 3.5R in a month, it means per month I'll be making about $5,600. Keep in mind, we've said we'll be profitable for only 6 months of the year, because that's the time we have left out of the 8 months. So for the rest period remaining during the year, I'll have bagged about $33,600. Multiply that so that we get our 80% split. It means you've gone home with about $26,000 for that period. This is only one $200K account. Keep in mind, we've assumed you'll only make money for 6 months. You might make money for the whole 8 months. We've also assumed you'll be doing about a 3.5R average per month. You might be doing maybe a 5R average per month. And depending on those figures, you might end up making even $40,000 during this period. But for me, on the lower side and the most practical side, I'm assuming you'll have made about $26,000 for that 6 months. Well, on the other hand, let's see what $1,000 can do for you. Now, my approach is very different. I want us to also be practical on the live account. And you see, when I'm trading a PropFirm, usually I've been given about a 10% drawdown. But on my live account, I don't have a 10% drawdown, meaning I can trade this account the way I want, right? So on my live account, I want us to assume if my account is worth $1,000, I want us to divide this 1,000 by 15. Such that I'll only blow this account if I take 15 losses. Because this is the same way you'll probably be trading your PropFirm account. So I want us to just use the same math. So on a live account, best case scenario, I divide my $1,000 by 15, meaning per setup, I'm able to risk as high as $66. So if I'm to make the same 3.5 per month, it means on a good month, that 66 times 3.5 will make me about $233. $233 is the same thing as making 23% on their $1,000 account. So I hope the math makes sense by this point. So I want us to take a very different approach, because on a live account, there are a couple of advantages you have, which is what I want us to apply here. Of course, you can go ahead and do your math in a different way if you wish, but this is the approach I want us to look at. I want us to focus on compounding our capital, because this is now my live account, meaning every month if I make some profit, I can choose to probably increase my risk, assuming I don't want to withdraw for a period of time, because I just want to see how well can I grow my live account. So we've settled on 23% being the average return we'll make per month, because we'll be risking about $66 per trade on the $1,000 account and averaging a 3.5R a month. But the difference is every month I'll be increasing my risk in proportion to the profit I've made, such that if I make $233 and next month my account balance will now be at $233 plus 1,000, next month I'll also take this and divide by 15 trade. So next month, from risking $66, now I'll be risking about $82 per trade. Times a 3.5R, it will still give you about $287, which in this case is still about 23% of the initial balance. So I hope you guys have understood my math. So that being said, our initial investment here will be $1,000. Now, for a live account, we don't have a challenge phase, meaning for the 12 months, we can start trading directly, right? So, and as to assume out of the 12 months, we only made money for 10 months. No, in fact, in this case, let's assume we made money the whole year. I just want us to see the difference between the live and the PropFirm account. So, it took $1,000 and the interest will be 23%, which is what I'm assuming to gain monthly, and the compound frequency will be every month, right? So every month the compound interest will be applying, because we'll be increasing our risk every month in proportion to the profits we've made in the previous month. And I want us to compound this for a period of only 1 year alone, and we will not be depositing any money. So if we compound this, let's see. At the end of the year, we will have made roughly about $11,000. Sorry, this will be our final balance. But the interest earned will be about $10,000. Now, if you look at this math, even though we've assumed a couple of factors, still, at the end of the year, I've been able to make about $10,000 from my $1,000 initial investment. Don't forget, during the same period, for only a 6-month profitable period, I was able to generate about $26,000 on my $200K account. So you can compare and see for yourself. On a 200K account, you've made $26,000 for only 6 months, while on your $1,000 live account, you've made about $10,000 of profit, almost $11,000 for a 1 year period. But in this case, we've assumed you are compounding. You can do your math without compounding and you'll see even how much less profits you can make on a live account. So if you're to compare the two, clearly you can see without a doubt that there is a huge benefit with trading with prop firms, assuming you're trading with a reputable firm that you are sure will be paying you out and you won't have any issues. So you will find some traders arguing, a prop firm challenge is just a demo account. Why should I trade with an evaluation firm? But at the end of the day, what matters is that you are skilled as a trader. You are applying your skills well and you are getting paid. So if I can get paid $26,000 at the end of the year from one 200K account, do the math. If I had $1 million worth of funded accounts, at the end of the year I'll have made about $134,000 from just a 6-month period of profitability. So by now you can see without a doubt we have a lot of advantages in the prop firm. But now I want to show you something else in terms of the advantages of the live account versus the disadvantage when using a prop firm challenge. You see, in a prop firm account you can never compound your money. That means even if you make $134,000. Personally, I've been using Funded Next for over 1 year. So even if you make $100,000 on Funded Next, whether you like it or not, at the end of the year, that profit will be on your dashboard for you to withdraw. And this happens at the end of your trading cycle, if it's bi-weekly or weekly, whatever period it is. So there is no chance for you to tell Funded Next, let me have my profits remaining in my dashboard so that I can keep increasing my risk and compound my profits to grow my account and potentially make more withdrawals. So you are limited in that sense. But now, I want us to now look at the same compound interest calculator. For 1 year, we've only been able to make about $10,000, which is way less than what we've made on the 200K account, which is worth the same $1,000. But I want us to now head on to the second year and see the possibility of what you can do with your money. So let's assume at the end of the year, we made like $10,000. Of course, as a trader, you want to pay yourself. So let's assume withdraw half of the profits and only remain with $5,000 as your starting balance. Let's say you're going to average the same 23% and we are going to make money for only 10 months this time on the second year. So for the 10 months, keep in mind this 23% monthly equals a 3.5 R a month. So this is nothing unrealistic. It's just that we've divided our capital by 15 to make sure we can risk slightly significant amounts of money on our account because we don't have a daily drawdown here. On the second year, if you can replicate the same thing for the 23%, but now you've withdrawn and you only have $5,000 and you make profit for only 10 months compounding, you finish your second year with about $39,000. Now you can see the difference. The more you move forward, the more money you can make with the compound interest. Let's do a third final year just to give you context. So now you have a $39,000. Let's withdraw and only remain with about half. Let's say this year you only start with $20,000. Same thing. Calculate. On your third year, you will be able to make as much as $158,000 on your account simply by compounding. You can do this math and continue for year 4, year 5, such that at the end of the year, you only withdrew half of the profit. So the other year, you now start with about $75,000 and repeat the same thing. You compound with $75,000 and the calculation will make you about $500,000 in profit. So if you look at it, can you make money with a live account? I actually think you can long term because you can apply compound interest on your live account without the limit of the daily drawdown or the maximum drawdown or being told that you need to have a consistency rule or all those limiting rules that are there in the prop firm. So you have freedom to trade your account the way you want. Also on your live account, you have the advantage to increase your deposit in case you're in a drawdown. Maybe if I'm in a drawdown over 3 or 4 trades and I have some money on the side, I could choose to increase the deposit on my account and still execute well, recover the drawdown and potentially even make good profits. On your prop firm, if you're in a drawdown, you can't add your deposit. If you blow it up, you've blown it up just like that and you have to start another challenge afresh. So I think all these accounts have differences, but I think if you look at it from a long-term perspective, especially from a perspective of about a decade, if you're looking at it from a 10-year perspective, I think your live account can make you crazy money if you apply compound interest. Because I've only started with $1,000. Keep in mind that is what I started with. There are many traders who can afford to deposit $5,000 as a start or $10,000. So for that trader already, in their first year, they can make good money using their live account using compound interest. Now, this is only my math. I'm not recommending anything to you. Do your own due diligence. It depends with your strategy. If you have a strategy like mine, it's very practical to divide your capital by 15 and be sure you won't lose it. Of course, the more the capital you have, the more you'd want to make sure you are risking less. But if you have a strategy like scalping, which gives you 10 setups a day, then it won't make sense for you to apply this approach. So just trying to look at it from an open-minded perspective, and also I'm looking forward to see what you guys think about this. But I really believe there's a huge opportunity in trading a live account if you can apply compound interest. At the same time, I think there's a lot of advantage of trading a PropFirm account for a very simple reason. When you trade with PropFirms, number one, it shapes your discipline, because with the daily loss limit and the maximum loss limit, you'll be remembering any day I hit 5% daily loss, I'll have blown my account. So this allows you to risk with a lot of discipline. I really think any trader who at some point has traded a PropFirm account successfully for 6 months to 1 year, even if in future you choose I don't want to trade PropFirms and I want to focus on my live account, you will have learned a lot in terms of risk management and discipline during the period you are trading with the PropFirms, just because of all those rules. And it can still assist you to now apply it on your live account. But on a live account, the advantage is now you can compound and make a lot of money without limitation. The disadvantage is it requires you to be self-disciplined, because there is no one telling you have a daily drawdown. So you might end up taking 10 trades in a day without caring, because at the end of the day, it's your account. But the problem of not having these limitations is if you are not yet fully disciplined, you might end up losing many trades and blowing a lot of live accounts. Not because you're a bad trader, but because you don't have those limitations which are making you stay disciplined in the market. So a live account will require a lot of discipline, because you can basically trade the account any way that you want. So my final conclusion between this comparison is simple. Myself, I've been big on PropFirms, but I'm looking forward to trading a lot of live accounts moving forward. I think I want to focus more on trading my live accounts as well. And how I'd look at it is both of them have an advantage. So I would recommend try to make sure you make your first about $50,000 to $100,000 using PropFirms. Take advantage of them as much as you can. In fact, as long as PropFirms exist and you can squeeze some extra money from them, why not trade with them? Unless you get to a point where you've made a lot of millions of dollars and you have so much capital such that you find a PropFirm to be time wasting for you, that makes sense. But as long as you can still make some extra money from a PropFirm, if one $200K account can make you about $26,000 for 6 months, we've seen that having $1 million can easily make you about $130,000. I don't see why you wouldn't want to make this extra income per year, even if I already had my own $1 million trading account. Again, as I've said, unless your goals are very different or you're heading to a very complete direction, and maybe the PropFirm model is just frustrating you and making it worse for you as a trader, then in that case, it makes sense for you to focus on your personal capital. But I think even as I grow in trading, I don't see why I wouldn't want to still have my $1 million live account at some point and still have $1 million in PropFirm challenges and make an extra about $10,000 or $20,000 a month from the PropFirm account. So try to make sure you squeeze money from the PropFirms as well, but be smart to use your PropFirm profit to invest in your live account or other investments outside trading. So those are my thoughts on the comparison between the two. I think it's very important for you to have both of them. And as usual, you can always share your thoughts about the video and your opinions. What do you think between using a PropFirm versus a live account? The advantages, the disadvantages, is one better than the other, and why? So that's it for this video, guys. I'll see you next time. Be sure to visit PropFirm Match for you to find your next best PropFirm. Do due diligence before you can decide what company you want to go for, and also for the best discount. I'll see you next time. Peace out.